Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Japanese crypto exchange Coincheck achieves 75% revenue surge in Q3 amid Nasdaq debut. Robinhood shares surge as Q4 crypto revenue jumps 700%. Will expansion into real-world asset tokenization redefine the market? Texas pushes forward with strategic Bitcoin reserve, expanding crypto investment potential. Fed's Waller advocates stablecoin issuance by banks and non-banks to boost US dollar dominance. Why is BNB price surging today? Key catalysts behind the bullish momentum. Japanese crypto exchange Coincheck achieves 75% revenue surge in Q3 amid Nasdaq debut. Japanese cryptocurrency exchange Coincheck has reported an impressive 75% surge in quarterly revenue during its fiscal third quarter, reflecting the robust momentum behind its recent merger and Nasdaq debut. Despite this remarkable revenue growth, the firm still recorded a net loss of $98.1 million due to substantial sales expenses and administrative costs. In its fiscal Q3 earnings report, October 1 to December 31, Coincheck revealed that its quarterly revenue climbed to $782 million, up significantly from $447 million in the previous quarter. This stellar performance was driven by a successful merger with Thunder Bridge Capital, a blank check company that was completed in December last year. Following the merger, Coincheck's ordinary shares and warrants began trading on the Nasdaq under the tickers CNCK and CNCKW, marking a pivotal moment in the exchange's history and its broader strategy for growth. Gary Simanson, CEO of Coincheck Group, the Amsterdam-based parent company, credited the robust earnings to their successful closing of the merger with Thunder Bridge Capital. This strategic move was first disclosed in March 2022 as part of a $1.25 billion de-SPAC transaction designed to transform Coincheck into a publicly traded company. The merger not only injected fresh capital into the firm but also bolstered investor confidence, enabling the exchange to rapidly expand its market presence both domestically and internationally. Founded in 2012, Coincheck has established itself as one of Japan's leading crypto exchanges, boasting 2.2 million verified customers as of December. Globally, it ranks as the 66th largest crypto exchange, with an average daily trading volume of approximately $120 million, according to CoinGecko data. The exchange's journey has not been without challenges. It garnered international attention in January 2018 following a high-profile hack that resulted in the theft of $534 million worth of NEM, XEM, tokens. However, after successfully reimbursing affected customers, Coincheck has steadily rebuilt its reputation and reinforced its commitment to robust security protocols. Coincheck's recent financial success is not only measured by its revenue surge but also by a 72% increase in customer assets during the quarter. Nonetheless, the exchange reported a net loss of $98.1 million, a figure primarily driven by $751 million in sales expenses and other administrative costs. These high expenses underscore the significant investment required to scale operations and maintain compliance as Coincheck accelerates its transition to a publicly traded company on one of the world's leading stock exchanges. The Nasdaq listing marks a crucial milestone in Coincheck's evolution. Originally slated for a public debut in 2023, the company encountered several delays, including a necessary amendment to its merger deal with Thunder Bridge Capital. Although the initial plan to go public was deferred, the recent extension and subsequent approval by the United States Securities and Exchange Commission in early November have paved the way for Coincheck to realize its public market ambitions. The merger with Thunder Bridge ultimately generated gross proceeds of about $31.6 million for the combined entity, which further demonstrates the strategic value of the deal. The exchange's Nasdaq debut is a testament to its resilience and ambition, signaling a new era for Coincheck as it leverages its enhanced financial position and global exposure. By tapping into the capital markets, Coincheck is poised to invest in technological innovation, expand its product offerings, and strengthen its competitive edge in an increasingly crowded crypto landscape. Coincheck's impressive Q3 revenue growth and its strategic initiatives, including the successful merger and Nasdaq listing, have captured the attention of market participants worldwide. These developments highlight the exchange's commitment to operational excellence and its determination to overcome past challenges. As Coincheck continues to navigate its path toward profitability, its ongoing efforts to optimize cost structures and drive customer asset growth remain critical for its long-term success. With a renewed focus on leveraging its enhanced market position and expanding its global footprint, Coincheck is well positioned to capitalize on the growing demand for digital asset services. Investors and industry analysts alike are watching closely as the exchange embarks on this transformative journey, raising an important question. Could Coincheck's strategic moves and Nasdaq debut be the catalyst that propels its market valuation to new heights in the competitive world of cryptocurrency exchanges? Robinhood shares surge as Q4 crypto revenue jumps 700%. Will expansion into real-world asset tokenization redefine the market? Robinhood's Q4 earnings report has ignited market enthusiasm as its record-setting net income of $916 million surpassed industry expectations and propelled shares to surge 17% in after-hours trading. The standout performance was fueled by a phenomenal 700% year-on-year increase in crypto revenue, underscoring the growing dominance of digital asset trading within the platform. During its fiscal fourth quarter, Robinhood not only achieved its fifth consecutive profitable quarter but also delivered a series of impressive financial metrics. The firm reported a net income of $916 million in its February 12 results, outperforming consensus estimates by over 9%. This milestone is further highlighted by the company's $1 billion revenue mark, coupled with a staggering 88% year-on-year increase in assets under custody, which now total $193 billion. A significant driver of Robinhood's stellar performance has been its remarkable growth in cryptocurrency revenue. The exchange's crypto revenue reached $358 million, representing over half of its $672 million in transaction-based revenues, a figure that has surged more than 200% year-on-year. Furthermore, crypto trading volumes soared by over 450% year-over-year, reaching an impressive $71 billion. This explosive growth has not only reinforced Robinhood's position in the highly competitive digital asset market but also demonstrated the substantial demand for cryptocurrency trading among its user base. Chief Financial Officer Jason Warnick remarked, Q4 was a record-breaking quarter that caps off a record-setting year in 2024, emphasizing the company's robust performance metrics, which include $16 billion in net deposits and a 75% quarter-on-quarter increase in crypto assets under custody to $35 million. These figures reflect the broader market's renewed trading activity, which has been partly attributed to significant geopolitical events, including the U.S. presidential election won by Donald Trump and the resulting surge in market prices. During the trading session on February 12, Robinhood's shares climbed 4.82% to reach $55.90, before surging an additional 17.1% after the post-market release of its Q4 results, according to Google Finance data. This robust performance has not only reaffirmed investor confidence in the company but also positioned Robinhood as a formidable player in the evolving cryptocurrency space. In an earnings call, CEO Vlad Tenev provided insights into Robinhood's strategic vision for future growth. Tenev highlighted plans to broaden the platform's crypto offerings by expanding into the real-world asset market, a move that could potentially redefine how digital assets are utilized. "I think the real power of crypto technology is when it's able to be applied to real-world productive assets, which would be under the securities regime," Tenev explained. This ambitious strategy includes the listing of crypto asset securities, which will facilitate the tokenization of both private companies and public securities, thereby bridging the gap between traditional finance and the burgeoning crypto ecosystem. Additionally, Tenev pointed to plans for integrating crypto staking services in the U.S., a move bolstered by the considerable success of similar services in Europe. This expansion into staking not only aims to enhance the platform's offerings but also to provide additional value to users seeking yield-generating opportunities within the crypto market. Another major development is Robinhood's strategic move to acquire the Bitstamp crypto exchange for $200 million, a deal intended to expand its reach and service capabilities among institutional investors in the United States. Although the acquisition is still pending regulatory approval, it is expected to be finalized in the first half of 2025, further solidifying Robinhood's position in the crypto industry. Robinhood's performance in Q4 reflects a broader trend within the cryptocurrency market, where increased trading volumes, innovative product offerings, and strategic expansion plans are driving substantial revenue growth. The impressive surge in crypto revenue, coupled with significant growth in customer assets and net deposits, paints a promising picture for the future. As Robinhood continues to innovate and expand its digital asset services, the integration of real-world asset tokenization and crypto staking could serve as powerful catalysts for its next phase of growth. With these dynamic developments and strategic initiatives in place, one critical question emerges for market observers. Could Robinhood's expansion into real-world asset tokenization and crypto staking revolutionize its platform and set a new standard for digital asset trading in the coming years? Texas pushes forward with strategic Bitcoin reserve, expanding crypto investment potential. In a bold move to drive cryptocurrency adoption, Texas lawmakers have reintroduced their strategic Bitcoin reserve bill under a new title, widening the scope for additional digital asset investments. Texas State Senator Charles Schwertner emphasized that Senate Bill 21, SB 21, aims to establish the state's first-ever strategic Bitcoin reserve, fostering financial innovation and security. Lieutenant Governor Dan Patrick ranked the bill among the Senate's top 40 priorities, signaling its significant legislative momentum. This latest proposal builds upon the previously introduced SB 778, allowing the state to actively invest, manage, and trade crypto assets for economic resilience. Unlike its predecessor, SB 21 permits investments in other cryptocurrencies, provided they maintain a market cap exceeding $500 billion for at least 12 months. Presently, Bitcoin is the only asset meeting this criterion. Additionally, The bill shifts asset management authority to financial experts, marking a departure from the stricter legislative controls outlined in SB 778. Notably, Riot Platform's VP Pierre Rockhard praised the revised legislation for lifting the $500 million annual purchasing cap, empowering lawmakers to increase Bitcoin reserves without limitations. The bill's progression adds to a growing trend, with 19 U.S. states now considering similar cryptocurrency investment initiatives. As states like Arizona and Utah advance comparable measures and North Carolina explores Bitcoin ETF investments, the spotlight shifts to Texas. Could its expansive approach to Bitcoin reserves set a new national standard for cryptocurrency adoption? Fed's Waller advocates stablecoin issuance by banks and non-banks to boost U.S. dollar dominance. United States Federal Reserve Governor Christopher Waller has voiced support for enabling both banks and non-banks to issue stablecoins, emphasizing their potential to bolster the U.S. dollar's influence globally. Speaking at a San Francisco conference on February 12, Waller praised stablecoins as a key innovation capable of enhancing retail and cross-border payments. He highlighted that the stablecoin market has matured and now requires a comprehensive U.S. regulatory framework to address risks. According to Waller, this framework should ensure that banks and non-banks alike can issue regulated stablecoins, fostering competition and innovation within the payments ecosystem. Waller expressed confidence in private sector capabilities to develop stablecoin solutions, stating, "The public sector should create fair regulations, allowing private companies to innovate for business and consumer benefit." He acknowledged stablecoins' current role in providing value within crypto markets, facilitating cross-border transactions, and granting access to U.S. dollars, particularly in high-inflation regions. Despite their promise, Waller cited hurdles such as regulatory fragmentation, inconsistent state and international policies, and the risk of stablecoin depegging. He stressed the importance of regulations that protect consumers while encouraging innovation. At the Atlantic Council on February 6, Waller described stablecoins as synthetic dollars with the potential to increase competition, lower transaction costs, and broaden payment accessibility. As stablecoins gain traction, Waller concluded by urging private firms to continue developing solutions that meet market needs, while calling on regulators to establish clear, global frameworks to support innovation. Will a clear regulatory path finally unlock the potential of stablecoins for mainstream payments? Why is BNB price surging today? Key catalysts behind the bullish momentum. BNB price has soared by 15% over the past 24 hours, hitting $724.70 on February 13 and outperforming the broader crypto market. Let's explore the key drivers behind this surge. 1. MyShell IDO launch triggers demand. The MyShell IDO, launched on Binance Wallet, sparked a buying frenzy. The IDO raised 27,959 BNB, over 20 times its 1,270 BNB target, valuing Shell tokens at $20 million. Binance partnership with PancakeSwap for the launch also boosted Cake price by 50%. 2. CZ teases memecoin projects on BNB chain. On February 12, 2025, Binance co-founder CZ hinted at a dog-themed memecoin, driving speculation. Binance 2025 roadmap emphasizes memecoin launches, pushing BNB price up 17% since its release. Memecoin trading on BNB chain increases demand for BNB for gas fees and swaps. 3. BNB eyes $970 with bar bottom breakout pattern. The bump and run reversal, bar, bottom pattern signals a potential rally. Key resistance at $705 broke, confirming the bullish pattern. The projected target from this breakout is $970, with minor resistance expected between $780 and $800. Outlook: can BNB sustain its momentum? With strong technical signals and fundamental catalysts, will BNB break above the $800 barrier and push toward $1,000 in the weeks ahead?